and I don't care who wins this year. I do care who wins this year, but what I'm saying is whichever party wins this year, taxes have to go up.
Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
You're listening to Saving with Silverman with Mark Silverman, your certified financial planner professional, the founder, in fact, of Silverman & Associates. His office is in Tucson and wherever you are in southern Arizona. Hope you will consider coming in and having a conversation with Mark Silverman. But first, why not arrange for a complimentary 20-minute introductory phone call? That's exactly right. You're under no obligation. Won't cost you a penny to do this. Talk with Mark Silverman on the phone for about 20 minutes and get some basic questions answered. He'll ask you some questions. You can ask him some questions. And then after that, you might want to get together for a face-to-face conversation, but only after that phone call. And it's totally painless. Why not reach out with a phone call and make it happen? Or a text, 520-333-7601. That is 520-333-7601. And I'll give you that number again in just a few minutes here. Mark, you know, one of the main topics of this conversation, everybody's concerned about this, and a lot of people don't think about it as often as they should, taxes in retirement. Most people assume that their taxes are going to be lower during their retirement years. How often are they actually right about that?
Well, that's a good point, Ron. In fact, I was told when I started in this business, coming on 25 years now. Wow. Anyways, we were told that people's taxes would be lower in retirement, and that's not, unfortunately, always the case. Big reason for that is a lot of people's houses are paid off, so they don't have that mortgage deduction. The kids are out of the house. They don't have that deduction. So a lot of these deductions that they had when they were working are no longer there. And if you have a pension, you're lucky that it'll be taxed. Social Security, a lot of times for people is taxed. Investment income, if you have rental property income, all these different things, unfortunately, are going to be taxed. And, I think one thing we can all agree on, even though taxes are still historically very, very low right now, I do think with this national debt, taxes have to increase. And I don't care who wins this year. I do care who wins this year. But what I'm saying is whichever party wins this year.
I know what you meant.
Taxes have to go up. That's just the way it's going to have to work. It's not going to pay itself off. But anyways, so I think a lot of people don't realize that. But I think, taxes, I think a lot of people are surprised that they're still in a high tax bracket, even in retirement.
What strategies can someone use while they're still working to improve their tax situation on down the road?
There's a few things that you can do, and we do tax planning here in the office. And I'll state this: I'm not a CPA. We don't do tax returns. I'm not legally allowed to give tax advice, but we do tax planning, which I think it's a big mistake because so many advisors out there just look to invest your money and don't even consider the taxes, which I know is a big mistake. I think you have to look at all the different pieces because if you make one decision, it can affect something else, and taxes certainly are one of them. So, I think one of the things that you can do is if you've put a lot of money into your 401k, which a lot of people do, that's great. You're contributing to that. If you have an option for a Roth 401k, I think it makes sense, even though you don't get the deduction now, it makes sense to maybe start contributing to the Roth 401k, because the problem is once you become, now it's not 70 and a half, but it's age 72 with this new Secure Act that just came out. When you have to start taking those distributions, all that money's taxed as ordinary income. And if you have a pension, you have Social Security, certainly at that age, all these different things, it could really put you into a higher tax bracket, which you don't have control of. One of the other things too is if you do retire prior to your required minimum distributions, which again is 72 for a lot of people now, versus 70 and a half, it gives you an opportunity to do what we call partial Roth IRA conversions, where you can take some of that money and start converting it over from traditional to Roth. So you pay the taxes now, which means you don't have to pay as much later. So that's another strategy. But there's always some things that we can do depending on everybody's situation is different, but really analyzing your whole situation and coming up with solutions to put you in a better financial decision is really what it's all about.
Mark, I was just sitting here thinking most people, we're talking about taxes, of course, in retirement, and most people don't even really think about that. They don't consider taxes, and a lot of people don't consider inflation either, and both of those things can make a whale of a difference in your lifestyle.
It absolutely can. It absolutely can.
Well, let's talk more about this, taxes in retirement. Give an example or two of a bad tax mistake that you've seen someone make where their investments, it could have been avoided altogether if they'd only come and talk to you first.
I think it's people that put too much into their 401k. And again, there's nothing wrong with saving, but saving it in the right places where maybe they had an opportunity to do a Roth 401k where they didn't, and they've accumulated a significant, $1 million or $2 into their 401k, which, when they go to start taking RMDs, that's a significant amount of income that they're going to be taking out. And I'm a big fan of not paying taxes on money you don't need. But unfortunately, with RMDs, the government doesn't care. If you have to take a certain amount out, you have to take it out. They don't really care if it's going to put you in a higher tax bracket or not. So you're taking money out of accounts and paying taxes on money that you're not going to spend, or the money that you don't need. So I think that's a big one that I see a lot of times. And maybe they haven't saved enough money in other accounts, maybe, savings in other areas where if they need to get some money out, it's coming all out of the 401k or IRA, et cetera, where it's taxed as ordinary income, where if they had other accounts that they could pull from, it wouldn't have such a tax burden. It might be taxed, according to capital gains, et cetera, long-term capital gains, that kind of thing.
One more question here about taxes and retirement, if you don't mind. Tell us a story, if you would, about a tax planning strategy that you used in the past to make a significant difference in someone's retirement plan.
Well, I'd say, doing the partial Roth conversion. So we'll work with somebody's CPA. If you don't have a CPA, we'll refer you to somebody that we know and trust. But, working with the CPA and getting on the same page. And if somebody's retiring, again, prior to now 72, depending on when you were born, it might be 70 and a half. But, if we do have a few of those years where your taxes are going to drop because you're no longer working, so you're in a lower tax bracket, doing these partial Roth IRA conversions to move money out. We have several clients that we're doing that with now, where we're moving money out each and every year. We look and see what the tax strategies are. And then based on that, we're going to start moving money over. That way, when they do have to start taking those RMDs from those accounts, that account there's not as much money in there, so they are more in control of how much they have to take. They don't have to take as much out, which is going to keep them at a lower tax bracket than they would have been had they not done anything with that.
Okay, I'm going to give out the number in just a moment for folks to come in and have a conversation with you, or a more immediate thing and an easier thing to do is by having a 20-minute introductory phone call with you, Mark Silverman. What will you discuss in that 20 minutes on the phone, and how can that lead to a complimentary visit in your office?
Sure. So what it is, it's like you said, Ron, it's an introductory call. So it's a time where we can have a conversation, get to know a little bit more about me. I'll ask you some questions about you. I'll give you some general advice on what needs to be done after our call. Not a fit for everybody. If you're not a fit, I try to help everybody that I can. I'll point you in the right direction or give you some advice of what you might need to do. But if you are a fit and we're both in agreement that we're on the same page and it makes sense to move forward, we will schedule a meeting here in the office where we'll go into further detail and discuss what our financial planning process looks like and how it can help you and what kind of things will be covered, so you have an exact idea as far as what we're doing. So, again, happy to have this initial conversation is really how to get the ball rolling. There's no cost, no obligation, like you said. The only way we can determine is if we are going to be able to help you is to have this conversation.
You've been listening to the Saving with Silverman podcast. If you have any questions at all about your financial situation, please give Mark Silverman a call. Again, his number is 520-333-7601, or go online to savingwithsilverman.com. For Mark Silverman, I'm Ron Stutz. We'll see you next time on the Saving with Silverman podcast.
The Saving with Silverman podcast is brought to you by Silverman & Associates Wealth Management, LLC, based in Tucson, Arizona. The show is available on Apple Podcasts, Spotify, Google Podcasts, and everywhere you listen to shows. Subscribe to the show on your favorite app today and never miss an episode. Just search for Saving with Silverman to find us, or visit savingwithsilverman.com to listen to past episodes, to contact Mark, and to learn more about how to make smarter decisions with your money.
Did you know that Mark Silverman also has a radio show? Tune in to Saving with Silverman Saturdays and Sundays at 3 p.m. on AM 790 KNST.
All matters discussed on this show are for informational purposes only. Opinions expressed are solely those of Silverman & Associates Wealth Management, LLC, and staff. All topics covered are believed to be from reliable sources. However, Silverman & Associates Wealth Management, LLC makes no representation as to its accuracy or completeness. This show shall in no way be construed as a solicitation to sell securities or investment advisory services to residents of any state other than Arizona or where otherwise permitted. Topics should be discussed with your individual advisor prior to implementation. Fee-based financial planning and investment investment advisory services offered through Silverman & Associates Wealth Management, LLC, a registered investment advisor in the state of Arizona. Insurance products and services are offered through Silverman & Associates, an affiliated company.